Hey, welcome everybody. Steve and Corey here. I know it's been a while since I've been on the show with Corey, so thrilled to have him here. What I'm not thrilled about is what's going on in the markets. So that's what we're here to talk to you about today. It is Monday. If you saw Mike's message, he put out a solo message on Saturday, kind of from the CIO perspective about what is going on. What Corey and I are going to do today is kind of talk about uncertainty, as well as where I think the markets are, and then what Wednesday's projected event is going to do with that uncertainty and then affecting the markets the rest of the week. So those are our three topics for today. Before we get started, this financial education presentation, you have to do your own due diligence before you act upon anything you hear in this presentation. More disclaimer information is available at ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. With that, I'm going to turn it over to you, Corey. Tell us about uncertainty and how it affects the markets.
Well, I'll show you exactly how it's affecting the market. So these are comparing Trump's two terms, the green being Trump's first term, the red being Trump's current term, second term. And there's all this stuff going on about a third term. Have you heard something? Have you
No,
seen that?
I think that's just noise.
Yeah, I know. I'm just kidding. But I have heard the words. So what you're seeing with that red line is a reflection of the market experiencing some uncertainty. And yes, we've said it a million times, it's around tariffs. And Steve, I don't know about you, but the term Liberation Day just, man, that's kind of that one doesn't bring peace of mind. It just that
What
about like Clarity Day, right? Something like that.
There you go.
So this is a chart put out this weekend by Bespoke, and this is mentions of the word uncertainty by Federal Reserve business contacts. And then you have another measure, which is policy. So government policy uncertainty. Both of these charts go back, the top one to the 1970, the bottom to 1985. You can see that we're experiencing a lot of uncertainty in Federal Reserve business contact information, as well as economic policy information. The market is really good at pricing in good news and bad news. The market is not good at pricing uncertainty because depending on the outcome, which is uncertain or unknown, things can change for the better or for the worse. So that's what you're seeing right now is the market is very uncertain. And I know, Steve was going to talk a little bit further about those next steps this week, but that's what I wanted to mention is that the market's not good at this. And how could it be, right? Because we don't know.
Yeah, I love it, Corey. I appreciate that. I'm going to take what you're saying and kind of turn it into reality. So first of all, what are we doing here at Ankerstar Wealth? Let me make sure I get the right screen up for you, which that's not it. This is it. So yeah, what have we been doing for the whole year? Basically, we had the sugar high, kind of ran up. So after the election, then on into 2025, then we had what I call tariff palooza or tariff mageddon, depending on which version of that you're on, whether you think it's helpful or harmful. But either way, I just want to show this, and I show this on occasion. This is the book that we have with Schwab. We manage about 110 million. We have about 90 of that with Schwab. But just at the Schwab stuff, this is kind of your inside baseball look. The top holding we have out here is a U.S. Treasury fund, and we have almost 10 million in it. So as the uncertainty has been building, we've been holding cash closer to the vest. A lot of most of us with the company don't reinvest dividends. A lot of times when bonds mature or CDs mature, we're going to hold that cash using USFR as our means to do so. So in addition to that, not only is cash our top holding, we also have, if you look at this number right here, have another 1.1 million in pure cash, right? That's not even invested in treasury funds. So that's our dry powder, if you will. You put that all together, it's about 11% going into the 90 million that you're showing here in Schwab. That's right around 12% cash. So there are times to go to cash, and if Ankerstar Wealth, who's pretty much aggressive across the board is going to a 12% cash position. Could you imagine what the more conservative firms are doing? So why do I bring that up? So it's really when you picture the market, there's M2 and, you can get into economics, but from a just conceptual standpoint, if you picture all the money in the world as a big like body of water, right? Sometimes when there's uncertainty, like Corey was saying, it's easier just to pull that money off the side and put it into cash. Well, then you have this big cash buildup. So you kind of picture this big cash, and then once you get that certainty, what happens is the slosh back, if you will, where all that money goes flowing back into the markets. And I will say two things. The move to cash is indiscriminate, right? So that's why even though, if you look at some of our top holdings there, Apple, Amazon, Google, are they directly affected by tariffs? Well, it's hard to tell. They are a little bit because they're so big, but are they directly? Not as much as, Ford Motor. But it's indiscriminate. When people are selling the SPY or the other index funds out there, the big names get hit. So all this money goes to cash. But then what happens when there's certainty, which is what my take is on the Liberation Day, whether you like the term or not, is that the money everybody goes, okay, now we have the unknowns become more known, and then money can get put back to work, which is ultimately our job, is to put that money to work for you the best we can for the highest return in accordance with your risk tolerance. So when the money comes, money has to go, or water has to go somewhere. Money is the same way. It comes flowing back in, and that's what I kind of expect to happen. When you look at, where are we at the overall market? Yeah, we're in the red. NASDAQ's the worst. But really, when you look at, if you go to full detail type quote here, it seems a lot worse than it is. We have a 1-year chart here. You look at the year-to-date change at the bottom right, it's 11%. It seems a little worse than that because the year started here and then went up like 10% above that and then came down. So, and then, that's the indice almost off 20% of its high. Then if you get into an individual name like Apple, then you can start to see that those names have sold off even more when you go to like a 1-year chart from, where the year started and then coming down significantly there. So it kind of affects everybody across the board when you have these periods of uncertainty. We saw it in COVID, right? We saw it in 2022 where nothing was going up, right? It's just people are like, holy crap, I need a second to think. Price in price in the good and bad, like Corey was saying. And then once you kind of have comfort to move forward with your allocations of investments, then that's when you move forward. So we do have Liberation Day. Some of that's kind of a hyperbole term, right, if you will. So I would say not my favorite either. But if you can see in the article, this is from CBS News as our source here. It's America's first trade policy, which I like a lot better. So rewind back to the election. So it's better to paint the broader picture here, and that's why I think when I'll get to the punchline of what I think is going to happen Wednesday. So before the election, you have your general parties that are dueling it out, and then there's personalities involved and a lot of drama. But for the large part, the Republican platform is a smaller government and more favorable business environment, i.e., less regulation, right? That's a very simplification of a very complex thing. But all in all, okay, that's kind of what we're thinking. So that gets elected and we have the sugar high because we're expecting this beneficial environment, and it doesn't happen, right? So when it doesn't happen, too many ads on these pages. No wonder I don't use CNBC News anymore. It's distracting. But you have all of these expectations of what's going to happen, and then it kind of doesn't happen, especially, Tax Cuts and Jobs Act 2. Are they, is that going to go forward? What's going to happen with Social Security? And there's a lot of things that we're talking about. Well, none of it kind of happened, and then tariffs took over. So it's kind of a rare situation that the market, we know exactly why the market's selling off. It's because of tariffs. And it's selling off not only because of tariffs, but the uncertainty of more tariffs, right? So I think what we're going to see on Wednesday, 2 days from now, is we're going to see the mother of all tariff moves, which in theory you would think, okay, that would again take the market lower, right? Because now, more companies are going to have to deal with things. Where I think it's actually going to mark the bottom ish, not trying to call the exact bottom, but this week mark the bottom so the market can now go higher, because at that we're going to get everything. I think we're going to get it all on April 2nd. So on Wednesday, we get to know all the unknowns become knowns, good or bad. But at that point, good or bad, it can be priced back into the market. And that's where we're going to see that money come flowing in off the sidelines. A lot of it will be delivery. If Trump says anything like this is the next round and there are going to be more rounds to follow, that will not be helpful for the market. That would be very bad. But I think if you kind of put yourself into Trump's mind, or what we think is in his mind, I should say, is he likes the markets to go up. He's trying to do the right thing here for the country. And I know he believes what he's doing. So I think he's not going to make it terrible forever, right? He's not going to leave that uncertainty out there forever. I think that he and his team will want to put an exclamation point on the uncertainty with the tariffs and kind of say, okay, there it is. Boom, that's it. Now everybody can price it in and move it back from there. So that I would say this is not what you're hearing a lot in the mainstream, and I'm going to give Corey the opportunity to give his side here as we close. But that's kind of my prediction of what's going to happen. Corey, you agree, or you think I'm out to lunch on my optimism here?
You try to look at both sides with anything, right? And I think, okay, and I laid this out a couple weeks ago. What causes a crash? So you're going to get a crash if you have extreme inflation and rates rising rapidly. I don't think that's where we're headed. And you get a crash if you get that downward spiral between economic demand and activity and all that. I don't see that in the labor market. So it's like, no, I don't think a crash is on the table. But where, I struggle to find where is that next wave of enthusiasm and optimism going to come from? Is the clarity going to be enough? So I don't know. Where I kind of am at, Steve, is I wouldn't be surprised if we get a little more sideways action here. Now, everybody's got an opinion, right? So they're not worth much. What's important to recognize is, and Steve and I have talked about this, we're both doing the same things. You're looking, no matter what your opinion is, you are looking to acquire high quality assets over a long period of time. And so that's kind of the same playbook, no matter the opinion.
Yep, you bet. I like that. And you're right. I'm not a buyer today, but I am going to be a buyer tomorrow, especially if we stay red today, and then we shall see. But we certainly know that I like Apple's price today better than I did, 2 months ago when it was 15-20% higher. So with that, stay tuned. This is a week to pay attention, right? So stay tuned, and we'll close out for today, and we'll see you guys back tomorrow. You have a good one. Bye.